Welcome back to Primary Source China Investment. Peng.guo and I are here with show C6, and we're talking a little bit about investment from the China investor perspective because it's been a rough year. There's been no place to hide, and we're going to do a little bit of a whip around and talk about each of those asset classes and maybe where they've been and maybe where they're going. Because it's not just equities. It's been a tough year all around. And if you're a mainland investor, what do? First off, the 10-year rate on the mainland is at the lowest levels it's been in 2 decades. It's under 2.5%. Obviously, the equity market was bad. There's no way to hide that. Here's a 2-year chart. Trust products, which was the safe haven for many, many years, now seem to default with a regularity that's never been seen before, and a lot of prediction that it's going to continue into 2024. Real estate market, well, you can go see the equity market. There was a lot of press this week about Evergrande in Hong Kong going through a bankruptcy proceeding. That doesn't necessarily mean they're going to be able to claw back on the mainland, and it remains to be seen what's going to happen with those mainland bonds. Deposit rates. So if you didn't like the 10-year rate, you're going to hate the deposit rate, which is 1.5%. The bright spot has been gold, up about 13.5%. Other traded commodities are up about 6% in the past year, according to Zhonghan indexes. And if deflation continues, this is going to be the place to be. Well, unless you want to be, gamble with crypto. The other thing is, some of the great names in China have not performed well recently. If you look at a security selection, take BYD, right? BYD is crushing it. Everybody is, this is a name that a lot of people knew because of Warren Buffett, but now people know because of the cars. They've been exporting, they've been beating Tesla at every turn. BYD stock is down 28% in 2 years. It's up 375% in 5 years, but the last 2 years it's been down 28%. CATL, a company we've talked about a lot in terms of battery making, again, down 50% in 2 years, up 292% in 5 years. Similarly, if you look at aluminum, China's the biggest aluminum processor on the planet. Aluminum prices are flat over 2 years, actually flat over the last 12 months. So this is going to leave any investor weary. Peng.guo, with that as the backdrop, what are investors saying on the ground?
I would like to say it's still back to the original. So right now, China is a global economy. There's no doubt with that. And from the stock pricing formula, while the growth rate get changed, the price could change significantly. So obviously, in the China, it's also emerging market. So while the people realize with that, as a related to trading activities, push the stocks to the extreme situations. So I'm not surprised for the bigger volatilities for the individual stocks, and I always get ready for those kind of a change. As soon as the change started, it's hard to stop it in the short term. From the all the asset class, we review them all of day. That's the best perform gold. I think this is very hard to do investment as well as the trading. So because most of people, it's hard to hold them unless you just go to store, buy the gold. The problem
they buy physical
liquidity.
Gold.
Yeah,
they
even
buy
you
physical
buy the
gold.
gold from the bank, while you go back, try to sell the gold to the bank, and they say no, because we don't have like the equipment or facilities to prove the gold you provided is 99%. That's caused the liquidity problem for the hard asset investments. So I think best way probably right now is still based on the hedge fund strategy fund, long short fund. As long as you fully cover your long positions, I think that's always a performance better. And don't forget, in China market, they can still invest in the SP 500. That's like 100. You bring it to the China market, as well as the Germany 40 index fund. And recently, people pursue the Nifty 225 ETF. That
Yeah.
is so ridiculous. They always buy at the high point, which is if you miss the starting point, just don't uh, get in at the peak or historical high. That's most of the time is a dangerous place.
Yeah, it is interesting. A lot of this thesis that we're talking about is really on the fringes. Oh, you buy some overseas, you buy some gold, you get some commodity. I mean, if the equity and the bond market for local investors is really hands off right now, that's a bad sign going forward, right? Because if you can't do your standard allocation or just set it and forget it, it's very hard for locals, never mind overseas investors. There was a great comment by Tim Moe of Goldman Sachs, a long time Goldman Sachs asset management guy. He said, China's 3% of your allocation, but 10% of your time. Before we get out of here, though, I wanted to talk a little bit about the policy. We always say we've got to follow the policy, but Beijing has been pretty slow and pretty vague with the policy. Finding asset classes, themes, never mind securities has never been more difficult. So, we always say follow the statements out of Beijing for some hope. And unfortunately, this has been very difficult because tangible policy has been few and far between. And in a perfect show, don't tell moment, the picture for this headline was of the Xi'an Chongqing high speed railway. They're talking about the consumer side, but they're really looking at more infrastructure side. And I think that sums up exactly where we are on the policy side in China.
That would be hard. So generally speaking, if you read the policy articles, it's hard to get what's the action plan for you. So and even you are not quite sure what's the action plan for them. But overall, you can see is that means the good signal or bad signal. You have to feel like from that perspective, and also some of the things is obviously initially they might not realize some of the economy problem, but over the years, and the market will tell them what's the exact problem, what's the cause of the problem. I think, generally speaking, people have no problem to understand the cause. But the reality is it's hard to find a solution. Like the local government, they don't have money, so how to
Yeah,
solve this problem?
yeah. But the thing is, like
Everyone knows what
investors in the
caused the
past,
problem, and right now it's almost impossible to resolve it. China try to looking for the growth industry and try to like the high tech area and try to also focus on the overseas market. So you will see more and more companies go outside of the China. But
yeah.
that is we are just the recent talk about the Meta. So these companies is really get a benefit from the Chinese companies because they try to get marketing and they put
Oh,
a
the
lot of
advertising on
money.
advertising on Meta. That's
Yeah,
ironic, right?
10% is already came from the China.
What percent did you say?
10% of the
10%. Of
advertisement
ad.
revenue came from China right now. So you never know the how the global economy get connected and affected each other. It's
Yeah,
hard to
that's a
make
great point.
prediction. Yeah.
That's a great point. All right, we're going to leave it there for show C6. Thanks for tuning in, and we'll see you next week.
Thank you.